We'll move on now to the U.S. West Stock Index futures pointed to a slightly lower open today after the Federal Reserve opted to start shrinking its balance sheet and signaled one more interest rate hike this year. On the data front, initial claims and the Philadelphia Federal Reserve's Business Index for September were both to be reported at around 8:30 a.m. Eastern Time, while the Federal Finance Housing Agency Home Price Index and leading indicators are both due out later. On the earnings front, Manchester United and Scholastic are both poised to release their latest earnings figures before the bell. While the Fed's statement on Wednesday was widely expected, it was a little more hawkish than traders had anticipated, causing the 10-year Treasury yield to jump higher. The futures numbers there all in the red. Dow Jones Industrial Average 0.04%, S&P 500 0.05% down, Nasdaq 0.08% down. Moving on now to Asia, most major indices there closed lower today after the dollar and U.S. Treasury yield spiked following big news out of the Federal Reserve. Japan's Nikkei 225 rose 0.18% as automakers and most financials notched gains. Across the Korean Strait, the Kospi edged down 0.24%. The Australian ASX 200 lost 0.94%. Greater China markets were also pressured. The Hang Seng Index was off 0.05%. On the mainland, the Shanghai Composite edged down 0.23% and the Shenzhen Composite fell 0.835%. Malaysia and Indonesia markets were closed for holidays. Away from the markets and back here in Africa, KPMG South Africa wants an independent investigation into the firm's conduct to reassure employees and clients after a scandal involving its handling of audits for businessman and friends of President Jacob Zuma. The auditor cleared out its South African leadership on Friday after it found that work it did for firms owned by the Gupta family fell considerably short of its standards. It found no evidence of crimes or corruption. The Guptas, accused by a public watchdog of improperly influencing government contracts, have denied any wrongdoing, as has Zuma. The Guptas and their companies have not been charged with any crime, and they say they are the victims of a politically motivated witch hunt. But the scandal has cost KPMG at least 3 clients, and several of South Africa's largest listed companies are reviewing whether to continue using the auditing firm. KPMG has become the 3rd global firm to be damaged by work carried out for the Indian-born brothers after the business consultancy McKinsey and the public relations agency Bell Pontinger, whose British business collapsed last week. And in Zimbabwe, the Finance Minister Patrick Chinamasa says the Southern African nation would not be able to pay $1.8 billion in arrears to the World Bank and Africa Development Bank until economic fundamentals improve. According to him, a payment plan agreed with foreign lenders in 2015 in Lima, Peru, could only proceed once Zimbabwe has reduced its fiscal deficit from around 10% of gross domestic product, cut its wage bill from 92% of the budget, and increase its import cover. Chinamasa said the government had negotiated a cheaper loan to pay the $1.8 billion, but had decided against paying after realizing that the country could still remain in a debt cycle if it did not address its economic problems. He did not give the source of the new loan, but said Zimbabwe was paying 15% a year on its World Bank loan. Zimbabwe's total foreign debt is more than $7 billion. And Tunisia plans to cut its budget deficit to 4.9% to gross domestic product in 2018, down from about 6% expected in 2017 as fiscal reforms take effect. The North African country is under pressure from the International Monetary Fund and its partners to speed up reforms to create jobs and cut its deficit after its vital tourism sector was hit by deadly militant attacks in 2015. Tunisia's financing needs next year will be about 10 billion dinars compared with about 8.5 billion dinars in 2017. Tunisia has been praised for its democratic progress after its 2011 uprising against autocrat Zine El Abidine Ben Ali, but successive governments have failed to pursue economic reforms to trim deficits and create growth. In April, the IMF agreed to release a delayed $320 million tranche of Tunisia's $2.8 billion in loans. And in Malawi, the economic growth will accelerate to 4.5% this year from 2.7% in 2016, helped by continued favorable weather conditions and its macroeconomic stability. In its latest financial and economic review, the Reserve Bank of Malawi projects GDP growth to hit 5% in 2018 on the assumption of continued favorable weather conditions and macroeconomic stability. Notable expansion in construction, wholesale and retail and financial and insurance activities will also contribute to the pickup in growth.